Hi there, welcome to Kneppy Invest and welcome to September 20th, 2024. We have about 1 hour and 50 minutes left of trading today and also the trading week. And we are finishing the week off on a positive note. And not only that, where the XJO is right now is at a really interesting level. I might discuss that in this video and also in the technical update video that I will release on Sunday. The very fact that we've had a positive end to the week is not surprising because NASDAQ was up 2.56%, Dow Jones up 1.26%. If I remember correctly, there was some positive unemployment or employment data out there in regards to jobs openings or something like that. So that's one of the reasons maybe we did see a bit of a rally. This is the NASDAQ chart. In fact, a possible breakout from a downtrend, short-term downtrend. So the NASDAQ is looking really interesting right now. XJO is looking really interesting based off where it is at this point in time. Record highs, but the XJO has been trading in this channel for about 15 years. I will show you the XJO in a second. Also look at the XJO when I do the technical update video. And just based off probability, I would expect a bit of weakness in the markets over the next few months. That's just based off probability because of where the XJO is right now in regards to this trading channel. So will that come to fruition? Who knows? The future is uncertain, but it's all about probability. What is more likely to happen in the future? That is what I do with my normal job. I forecast the future, and it's all about based off probability. It's not black and white, lots of gray in there. Anyway, so a really good day on the markets. Well, maybe not really good. It's been a green day in the market. Pretty good week, I would assume. Let's have a look at the. No, we'll do that later. Or not later, in a second or so. So what's the agenda for today's video? We'll go through the ASX today, looking the best and worst performing sectors, indices, and also companies. I do have a top 5 stocks of the day. It could be flexible. I'm willing to take a few of these companies out if I find 1 or 2 other companies that are better, because one of the companies that is in the top 5 list is doing capital raising. I thought I'd just talk about this company because the share price did increase a fair bit the other day, and I think the management is just taking advantage of that. And then we'll have a look maybe at some charts, maybe a few of your comments. There was an interesting comment in regards to why the market in Australia rallied yesterday at about 11:30 midday. Something here it is. Rick Thellion talking about the August employment report revealed that the Australian economy added 47,500 jobs, well above the 25,000 expected. That's the most important thing. It's not how many jobs were added, it's how many jobs were added compared to expectations. Unemployment rate held steady at 4.2%, the highest level since November 2021, while the participation rate stayed at a record high of 67.1. Stronger than expected employment rise indicates the labour market is cooling more slowly than anticipated. However, with the participant rate supply still at historic highs, the RBA is likely to keep rates steady at 4.35%. That would not be a surprise. And really interesting in the American markets, we have seen the bond yields rise, the 30-year bond yields rise, which is suggesting that the bond market thinks that this 50%, or not 50%, imagine a 50% drop in interest rates, this 0.5% or 50 basis point drop in interest rates might be a little bit too much. And there is a risk that inflation will increase. And that's why the future or the longer term bond yields are rising, I think. I could be wrong. That's what I think. Anyway, so let's get into the XJO. So before we have a look at the market, the ASX today, what am I talking about in regards to where the XJO is right now and why I'm a little bit more wary? And I think there could be a little bit of weakness in the market over the next few months. So let's have a look at the XJO. So interesting enough, I'm bullish on the NASDAQ right now because it's just broken out. I'd say I'm bullish on the Dow Jones. It's at record highs. The XJO is at record highs today. But I have, in fact, I'll look at the weekly chart here. In fact, I am going to have to auto fit. Just can't believe I have to do it. So I've put this trading range in this particular chart. I don't know how long ago I put it in, many, many years ago. And the XJO has been trading in this channel, upward sloping channel, for 15 years, since 2009, after we came out of the GFC. Only once, actually twice. No, we'll say once. Only once has the XJO gone above the top of the trading channel, also once below it, and that was during the COVID-19 financial panic, which is understandable. The only time the XJO went above or has been above the top of the trading the channel was back in August 2021 after the XJO had about 12 months of positive rises. Yes, 12 consecutive months of positive rises. Maybe it was 11. And then it got above the trading channel for maybe a day or two and then fell below. And then we saw a fair bit of weakness. In fact, the XJO fell from 7,600 back down to 6,400 within about 9 months. So why am I talking about this right now? Look what has happened today for the XJO. It has gone above. It did. The XJO went above the top of the trading range today and has pulled back and is right on the top as we speak. So based off probability, based off what's happened in the past 15 years, whenever the XJO has got towards the top of the trading channel, we have seen weaknesses. In fact, just before COVID-19, it was right on the top of the trading channel. And in fact, that's when I started, or not then, right then, but I was actually selling quite a few of my positions at that point because I thought there was going to be weakness in the market. I don't think I really did anything back in August 2021. It doesn't happen all that often, but it does happen. And whenever, in fact, it happened 3 times in a row back in 2010, got very close in 2015. But every single time it's got to the top of the trading range, we have seen a little bit of weakness. But trends are made to be broken. I would even say channels are made to be broken. And eventually, this particular trading channel will be broken. Is that today? Well, probably won't be today because we have seen a little bit of selling. We just zoom back in. So we have seen a little bit of selling. So it won't be today, but maybe next week. Now, in saying that, the XJO has seen 1, 2, 3, 7 positive, 6 positive days out of about 7. So I think we are in store for a little bit of pullback. I would say the XJO or the Australian markets are a little bit overbought. Yes, overbought right now. I completely forgot to talk about something else. I made a mistake yesterday. This is the first time I have ever made a mistake like this. I decided to sell some stocks, some trading positions that weren't quite performing. And I did this when I was tired, just before I went to have a nap. And one of the things I've decided is I tend to make worse decisions when I'm tired. So I don't want to make these decisions when I'm tired. So I've sort of ignored that rule yesterday, and I made a mistake. Fortunately for me, the mistake turned positive. So I decided to sell a few companies, stocks, and one of these companies I decided to sell, and then the share price rallied 10%. Not only yesterday, but also today. And I thought, yesterday afternoon when I saw the share price had rallied, I was like, why did I do that? And then I went to see which dividends I'd received yesterday, because we're seeing a lot of dividends being put into our bank accounts, that sort of thing. I think most of my dividends get straight put into my superhero and my self-wealth accounts. So they don't go to my banks. Anyway, so I had a look at the activity today, and that's where you see which dividends have been received. And then I noticed instead of selling my position in this company, I bought shares in this company. So I doubled the amount of shares. So I actually financially benefited about $300 from this particular mistake. This is the first time it has ever happened when I've meant to sell a company, but I've bought more shares. It has never happened to me over 15 years of investing. And that just shows you that you do have to be careful when you're making decisions if you're tired. And I have made some bad decisions when I've been tired. That's why I do have this rule. And on occasion, I ignore the rule. And that's a bad decision, a bad choice. So it just shows you have to, I want to be steadfast about this particular rule. Don't make decisions, buying or selling decisions when you're tired. In fact, I'm tired right now. Anyway, so that's the XJO, my bad decision, actually a mistake. It wasn't a bad decision in the end. I benefited from that bad decision. And yeah, the share price of this company, Tours, TUA, and let's have a look at the chart. TUA has gone up 10% since I decided to sell. Yeah, 2 really good days in a row. Funny enough, I had a look at this chart. I was like, why was I thinking of selling it? Share price was at a really good support level. And I can actually see why the share price has bounced. It's bounced off a support level. In fact, my decision should have been to buy more shares, if anything. Anyway, so share price up 5.8% yesterday, up another 3.8% today. I mistakenly bought on open yesterday, and the share price actually fell from the close of previous day. So I bought at $4.08. Share price now is $4.51. So yeah, over 10% gain in that position, which means I bought 790 shares. So probably a $340 mistake. Positive mistake. Positive financial gain. Yeah, anyway, lessons to be learned. And preferably when you do make a mistake, and it's good to learn a lesson, but it's much better if the mistake turns out positive. You still want to learn from it though. Okay, so let's get to the ASX today. I'm maybe falling a little bit behind time right now. Let's have a look at the best performing sectors and indices. And looks like the peak in the XTX or the All Tech was towards midday, and the XJO and the XJO have fallen during the day. We already know that because we have seen a little bit of selling in the XJO because it went above the top of the trading channel. And overall, a pretty good day in the market. In fact, every single sector is up. You don't see that all too often. And the other day, or maybe it was even yesterday, we saw a bifurcated market where some sectors up quite big, some sectors down quite big. Today, they've all performed okay. The worst performing sector is staples, up 0.01%, and the best performing sector is discretionary, up 0.84%. So no big range in sector performance today. No surprises, I suppose. Gold's up 0.87%, so a good day for gold. And all the different indices are up as well. Let's have a look at the ASX 20. This is the sort of day when you see the market up slightly and everything's performed well. You want your portfolio to perform well as well. And you look at some of the companies in your portfolio that actually went down. You go, why? Why did you go down? Oh. Anyway, let's have a look at the XJO, not the XJO, what's this one called? XTL. And 8 down, 12 up, which is to be expected. It's not up by all that much. So some companies are going to be down. So which companies have fallen in the XTL? Transurban, Telstra, Woolworths, NAB, Goodman Group, Brambles, CSL, Coles Bank. CSL actually keeps on falling, doesn't it? I keep mentioning it's in the losing column in the ASX 20. And best performing companies, four companies up by over 1%. Wesfarmers, Woodside, ANZ, and REA Group. Nice, in fact, fairly nice, diverse group of companies there. We have a diversified investing company, a conglomerate. We have energy, a bank, and tech, communication services. Not sure if I believe that. Anyway, so let's get to the best and worst performing companies on the ASX today. I have come up with the top 5 stocks. I am considering changing it if I see a few interesting companies in the best and worst performing companies today or stocks today. So let's have a look at the top gainers. What do we see here? Mithril. Okay, I have included Mithril in my top 5 stocks. I actually mentioned Mithril the other day, and they released another interesting announcement. In fact, this was a gold hit, some gold drilling results, and just based off the title, I went, oh, that looks pretty good. And the market says it looks pretty good, up 58.54% on pretty good turnover. Bridge SAS up on very low turnover. A few other companies here on turnover less than 100,000. I'm not going to look. I'm pretty sure Amplia Therapeutics did release something today, though. Amplia, FDA fast release or something like that. Fast track, FDA fast track designation for namafotinib. So nice day for Amplia. Let's have a look at the chart for this company. This rings a bell. This company rings a bell. So I have a feeling the chart might look pretty good. Yeah. So the share price has really taken off in the past month and a half. And obviously this is on the back of some good news. Not necessarily breakout today. So the share price is up about 20% or so. The share price was higher not that long ago. And the volume today is fairly weak. And it's understandable. It's not my favorite type of announcement. FDA fast track designation. Yeah, okay. There's some positive to it, but it's not positive to the extent that I will get really interested. Anyway, so let's move on. Any other companies here of note? I can't remember any of these other companies releasing something. Clarity Pharmaceuticals. Now, I am a shareholder of this company, So if I'm a shareholder of a company, I usually know if a company has released an interesting announcement. Clarity Pharmaceuticals didn't. They did release appointment of executive director to Clarity's board. I don't see why that would lead to the share price rallying. The market cap of this company is getting pretty extreme, probably close to $3 billion. And yeah, an absolutely beautiful looking chart. Not big volume today. Yeah, the chart still looks pretty good. There's no complaints about this chart whatsoever. If we see another day like this, I'd get a little bit nervous that there's getting a little bit too much hype in this company, a little bit too much FOMO or frothiness. So I don't want to see the share price rise much from here. In fact, I prefer to see the share price go sideways, consolidate. I do get a little bit nervous when I see the share price accelerate higher, and Clarity could do that over the next few days. Don't know. Anything else here? Keely Resources. I think I said that yesterday or mentioned that company yesterday. And that's about it. Okay, let's have a look at by market cap. Oh, funny enough, the first 4 companies in this list are companies I own. 2 of these companies I own for the longer term, Telix and Neuropharmaceuticals. We have 3 pharmaceuticals companies in this. Something must have happened. Telix up 7%, Clarity up 12.87%, Neuron Pharmaceuticals up 5.7%. It can't be a coincidence. Something must have happened that has led to these 3 companies moving up. Yeah, and Life 360, 6.57%. I think the chart for that's going to look pretty interesting. In fact, let's have a look at the chart for Life 360 now. There's a little bit of a weakness in the share price, and this could be, yeah. I've recently put an uptrend line for Life 360, and we have seen the share price reach this uptrend line now 3 times. And I was thinking, oh, if it gets this uptrend line, might add to my position in this company. I'll have a look at Telix Pharmaceuticals as well, because the share price of this company has gone bananas the last 2 days. Yeah, getting back towards the all-time highs. I'd like to see the share price of this company get above $21. And Neuron Pharmaceuticals is a complete opposite. This one looks negative, and we have seen a little bit of selling today. The reason I know that is the one-day candlestick, there's a bit of a shadow. So when you do see a shadow above the main body, that means there's been a selling. And it's hopefully it's quite obvious why there's been a bit of selling today, because the share price has moved down quite a bit over the last few months. So there will be quite a few shareholders who bought at high prices who want to get out of this dog stock. And they do put pressure on the price. So unless you see a lot of enthusiasm from the buyers, the share price will be under pressure. And we have seen that with Neuron just because the share price has rallied a little bit. Anyway, so an interesting day that those 4 companies are at the top of this list. Spartan Resources, Mesoblasts, Tabcorp, don't know why. I don't think Tabcorp would have released anything today. And I was going to say, they didn't release, when you see share price of a company drop like 8%, maybe they've gone ex-dividend, and there's nothing opposite of being ex-dividend. Yeah, so Tabcorp board renewal. Okay, 4:31 p.m. yesterday afternoon. It wasn't marked price sensitive, so I definitely missed this one. And there's a chance that the market likes this board renewal. I would say I've probably never heard of any of these people. Isn't Tabcorp run by that CEO, that ex-AFL CEO? Not sure that's a good move. Ben Chenoweth. That name sounds familiar. Brett Chenoweth. Might be just the last name. Might be getting him mixed up. Yeah, Tabcorp shares saw as Brett Chenoweth appointed as new chair, co-founded Bombora Group in 2014. The name does sound familiar. I'm not sure why. Okay, so that's interesting, but the chart looks pretty pathetic. And I don't think this is a breakout or anything for Tabcorp. And this might have belonged in the top 5 stocks of the day. Oh, there you go. But the chart looks terrible. A bounce, but a nice volume, but I just don't like this chart at all, even though this might be a positive announcement from the company. Let's move on to other. GR Engineering Services did release an announcement. They won a contract with Develop Global, I believe. And this is another case where maybe this company belonged in the top 5 stocks. But the chart looks pretty bad. Up 6.27%. Develop awards contract to GR Engineering Services. I'm not the biggest fan of those sort of announcements, those contract wins. Don't know the margins. In fact, there was a company I was following for quite a few years. They kept winning heaps and heaps of contracts. Share price never moved. And then realized that they were winning these contracts on really low margins. So they were margin undercutting, if that is a word, their competitors. And you can't succeed if you do that. Anyway, so the market likes this. Do they like it for Developed Global? Yes, they like it for both companies, Developed Global and GR Engineering. Let's have a look at the charts for both companies. G&G. Yeah, as mentioned, the chart looks pretty bad, and this is a nice little bounce. The volume has been quite weak today, however, so I don't like that. And Developed Global, I assume, is similar, but not quite as bad as this. Yeah, not quite as bad, but the share price definitely is in a down trend. So no interest in either of those companies. Nice day from Sierra, but on occasion, it needs to have a nice day. SKS Technologies. Now, I'm a little bit biased here because I do own shares in this company, and I did put this company into the top 5 stocks of the day, and possibly I should have included Tabcorp instead of SKS. Just that's in hindsight. Now that I know there was an announcement and a board renewal from that company, which possibly, arguably, is a little bit more. No, it's not. It's not more interesting than SKS Technologies, and I'm going to say that right now. And Moneyme's had a good day. So my trade Moneyme still going strong. I bought when the share price I thought had risen above 10 cents, and I thought the probability it would remain above 10 cents was greater than falling below 10 cents, if that makes sense. Let's have a look at the chart for Moneyme. And I have mentioned this time and time again. 10 cents is a fairly significant level. Share prices of companies will have trouble getting above 10 cents. And Moneyme had trouble for about 9-10 months. And then it failed on the 2nd of August. It tried again on the 19th. It succeeded on the 20th. And that's when I went, I think this is it. I think this is the breakout for Moneyme. It's tested 10 cents on 3 days, and it succeeded or failed. The test succeeded because share price didn't drop back below 10 cents, and now it's starting to move higher. I'd just like to see the share price get above 15 cents. That would be a good move for Moneyme. Okay, and what else do we have? Well, that's it. Let's have a look at the top losers today. We have Panther Metals. Something I learned the other week is panther is not a distinct species of cat. It's a black jaguar and a black leopard. I was shocked when I read that. I thought panthers were a unique species. Panthers, of course, panthers, of course, yeah. Panther, not a species. Panther is a general word. It does not refer to a species of wild cat. Panther is most commonly used to describe 3 different types of cat in the wild. Leopards in the black form, jaguars in the black form. And there must be another one. I had no idea about that. I just thought they were distinct species. There you go. Anyway, we have learned something new today. Well, maybe not you. Maybe you're way smarter than I am. But we have learned something. Anyway, Panther Metals, not a good day, but a small company, 1.57 markup. Who cares about that? Although probably some shareholders do. And most of these companies are fairly small, and they're fallen on a fairly low turnover. Australian Gold and Copper, however, down 13% on a bit larger turnover. In fact, I have a look at Blue Glass as well, because that was on a turnover of greater than 100%, not 100%, on 100,000. And a microelectronics commons projects update. I know nothing about this company. Was not marked price sensitive. The market didn't like it. Let's have a look at the chart, or it could be noise. Although higher turnover, so probably not noise. And chart looks horrible. So let's move on to the next one. And Australian Gold and Copper, some pretty good turnover here. Now, this company has been making waves the last 3 or 4 months, so this could be just noise. Recognition of non-executive co-chairman. Again, not marked price sensitive. The market has not liked that. So let's have a look at the chart for Australian Gold and Copper. I like this name of this company because it tells you what they're doing. The Australian company exploring for gold and copper. And yeah, this company made noise back in May. I thought it was a few months ago, but that's 4 months ago now. Time moves quickly, and the chart's not looking as good. particularly if the share price falls below 20 cents. That would be a fairly negative move. It's getting towards that now, 23 cents. Anything else interesting here? Labyrinth. I mentioned Labyrinth the other day. They released something good, I think. Sun Silver. Oh, fairly big turnover for Sun Silver. SS1. Fundraising, capital raising 2 days ago. And share price rallied those 2 days. So this is just a bit of profit taking, I would assume. SS1, a recent listing on the ASX, a bit of a love company, a love. Next investors are in love with this company. I keep seeing emails from Next investors saying how good this company is. And then I discovered a few months ago that it's a paid system. So Sun Silver, more than likely, possibly, pays Next investors to promote the company. So obviously it's legitimate. You can do that. Anyway, yeah, the chart looks pretty good. And there's just a bit of a pullback. Maybe buy the dip situation or pullback situation for Sun Silver. Okay, let's have a look by market cap. See if there's any interesting companies here. AFT Pharmaceuticals, low turnover. EBR Systems, I don't remember this company releasing anything. They recently did a capital raising. Maybe that's it. Share price up yesterday. Yeah, EBR placement and institutional tournament offer completed. So they've gone back to trading today. That's why, because of the capital raising. So we can move on to the next company. Sayona, PointsBet, Tauga, Biome, probably just some profit taking there. And nothing of note. Okay, so let's get to the top 5 stocks of the day. And there was no other possibilities here, no other candidates, that's the word I was looking for the top 5 stocks of the day, apart from maybe Tabcorp, GR Engineering. They could have made it. So let's start off with a company that's doing capital raising. Select Harvest. Share price rallied the other day. Share price up 7.88% on the 18th, the Wednesday. And I think this is a really good capital raising by the company. They obviously need some money. So $80 million capital raising. I had a look at didn't look at the presentation. I had a look at the business update because it says business update. I went, oh, business update. And I don't know. Okay. Now, this is not my favorite type of company. Agriculture is hard, no matter what you grow. Now, it did sound fairly positive initially. Where was it? Select Harvest. Oh, record volume of almonds, sold to date, supported by strong Select Harvest crop and an increasing pool of external grower almonds. Now, their crop expected to be approximately 29,500 million tons, megatons. This is where my naivety comes into play. Is that million tons? MT abbreviation. Assuming it's million tons. No, it's not mountain. Mechanical translation. Megatons. Pretty sure it's not megatons. I'm just going to assume it's millions of tons. Maybe it is megatons. I have no idea. Anyway. Where is the announcement? It sounded good. Then I had a look at their forecast financial year 24 numbers. EBIT between 17, 19 million and underlying profit between 1.5 and 3 million. So even though things are looking good, not much profit in EBIT. And almond prices to be between 770 and 775 and debt of 230 to 245 million. What are they doing with this capital raising? That's the first question I usually ask. Is this for an acquisition? Is this for working capital, which I absolutely hate? So what are they doing? Or is it to repay debt? I don't mind that sometimes. Undertaking capital raising with proceeds allocated to repayment of debt and provision of facility headroom, 71.6 million. Capital investment to increase processing capacity, 5 million. I like that to be a little bit more. So this capital raising would be, if that was a little bit more, this capital raising would be for future growth. The offer is expected to reset the balance sheet. So the whole reason of doing this capital raising is to make sure the balance sheet is a little bit more healthy. I suppose that's not a bad thing. I wonder how long it took this company or the management of this company to, I did not see this earnings guidance, although they already mentioned that. Anyway, And so reported profit's going to be 2.5 to 4 million after $114.7 million loss. Anyway, I think one of the reasons why they decided to do this capital raising was because share price had been on a run, up 7.8% on the one day. And that would mean that there was no loose lips. And the share price looked like it was trying to break out. It got to a resistance level. Maybe the management of this company are technical analysis, and they saw the share price at a very important, significant resistance level, and they went, "Now is the time to do a capital raising." In fact, I didn't even have a look at what price the capital raising is being done. $4.50 definitely should not be lower than $44. Did they actually even mention the price here? Here we go. 380. Ooh, that's a pretty big discount. I was going to say anything under 4 I probably wouldn't like. I would love it was like 440. That would be awesome. So if you go back to the chart, 380 is way down here. I would expect the share price to drop a fair bit when shares are back to being traded, probably next week sometime. Okay, so that's Select Harvest coming in at number 5. Coming in number 4, we have Namoi, who released something really interesting. Now, this company is continually releasing, what do you call it? I suppose takeover bids or something like that. Target statements, supplementary target statements. There's like few companies targeting this company with target statements. Panel receives application, variation of takeover bid. This is what I see all the time from Namoi Cotton. So there is sort of like maybe a bidding war for this company, this cotton company. So why have I included Namoi in the top 5 stocks of the day? They released an Appendix 4C. I did not realize until I had a look. So they released on the 20th of September, which means if you go back to June, this company releases their Appendix 4C out of sync with other companies. So they release it in June, September, December, March. So let's have a look at this company's quarterly results. Why is there bidding war for this company? What am I not seeing? It's cotton. Let's just have a look at their statement of cash flows, operating activities, and receipts of customers, $301 million. Now, obviously, there is a bit of seasonality to this company, and it is quite noticeable that there is seasonality when you look at this particular Appendix 4C, because we have a current quarter and a year to date. So the first 3 months, they only had $66 million in receipts. Now it's up to $300 million. And also, if you go back down to operating cash flow for the quarter, operating cash flow positive $7.5 million, but operating cash flow negative $2.47 million. So not sure when the prime cotton picking time of the year is. I am no expert, but maybe it's the last 3 quarters, and maybe this particular quarter is the best quarter for this company. Do they have much cash? Yeah, $13 million, but that's because it was a positive operating cash flow quarter. Debt, the other thing I look at, so a little bit of debt, $40.7 million, plus $37 million of unused financing facilities. Okay, so let's have a look at the chart for this company. I have no idea what the market cap of this company is. I'm going to have a guess. I'm going to say $221 million. $147.83 million. I was a little bit off, actually off by a fair bit, 50%. Anyway, let's have a look at the chart, because there has been a lot of interest in this company, a lot of takeover bids, and you'll probably be able to see that when we look at the chart. Yeah, you can see the first takeover bid for this company would have been on the 28th of November. And the whole reason I know that, share price on that particular day rallied 33.8%, and then share price went sideways. This is the sign of a company that's had a takeover bid. Share price just goes sideways or up a little bit, very gradually. And then there would have been another takeover bid on the 21st of March, and maybe 1 or 2 others after that. And you can just see the share price all over the place. So there is a lot of interest for this company. Just going to have a look at the weekly chart. Not the chart of a high quality company. In fact, this goes all the way back to 2001. And yeah, no interest in Namoi Cotton. And maybe it won't be much longer on the ASX. So that's Namoi Cotton coming in at number 4. Coming in number 3, we have SKS Technologies. I'm a little bit biased here. I am a shareholder of this company. Share price up 6.8%. In fact, in the last 6 trading days, the share price has increased about 40%. Share price went all the way down to $1.06. I just don't understand it. Company has already been releasing positive stuff. The CEO did make a slight mistake by saying they were listening to investment bankers who were telling them they should do a capital raising. I think that was a slight mistake on his part. I won't blame him for doing that, but hopefully he has learned his lesson. And today the company has announced, 16 days after the last announcement, they have secured a $22 million data center contract. And this also means an upgrade. They did this last announcement. So they have increased their revenue forecast for financial year 25 to approximately $260 million. So this is a new contract, plus it's like an upgrade. Now, my problem with SKS Technologies is there's a lot of tailwinds behind this company. And we are talking about significant tailwinds behind this company because of data centers. How long are those tailwinds going to last? Now, I'm not sure if this company, well, that's a little bit unfair. I was going to say gravy train. This company is taking advantage of the gravy train, so they're not putting the hard work in, but more than likely they are putting the hard work in. And so I'm probably being a little bit unfair by saying that, but this company is definitely taking advantage of these tailwinds. But eventually, in my opinion, these tailwinds will come to an end. I'm not sure when. Could be a year from now, 3 years, 5 years, could be 2 months from now. I'm not sure, but they're definitely taking advantage right now. And the chart has been looking good for a while. Bit of a pullback, as I mentioned. That's the weekly charts. So you can just see the share price taking off on these tailwinds. Exactly what it should do, because if it tailwinds, actually, no, plane takes off in headwinds, doesn't it? Yes. Anyway, so beautiful chart. Share price rose. In fact, in the last year, the share price of this company has risen from like 15 cents to above $1.50. So it's been a 10-bagger. And we did see that pullback. The share price hit $6 on the Thursday, 12th of September. So we are talking about 8 days ago, and the share price has risen 40% since then. Now, we have seen a little bit of selling the last 2 days. And the reason I know this selling is because of the shadow above the main body. And we can see why there's been a little bit of selling, because back between the 15th of July and around the 28th of August, quite a few investors bought in that area, that range, that zone, and then they saw the share price drop to $1.06. And so when they saw the share price drop to $1.06, they automatically think this is a dog stock and they have to sell. So when they see the share price rally, sell. That's their mindset. I have to sell. So very short-term mindset. Anyway, and that's why there's been a little bit of selling pressure in the last 2 days, because the share price has rallied into this resistance zone. Good volume. I would have preferred bigger volume today, but that's okay. The volume I like is the volume we saw back in July. That's pretty good volume. So that's SKS Technologies coming in at number 3. Coming in number 2. No, I'm going to change this. Coming in at number 1. No, number 2, sorry. Myer Holdings. Released financial results. Share price down 4%. Yeah, I initially put this at number 1 because it's financial results, my favorite type of announcement. Share price down 4%. Results were, there's nothing in that. Which one did I open up? Must have been the results and presentation. Now, profit was down a fair bit. Sales down. Well, I thought that would have been expected. So I think the market mostly expected that. So comparable sales up, in fact, 0.4%. Online sales up. So it's interesting. They, at the top of the overview section, they put the positive stuff. That's exactly what they should do. So comparables, although you would prefer revenue and then profit to be at the top of that overview section, but comparable sales, group online sales, then total sales down 2.9%, and eventually they get to NPAT, which is way down the bottom, and NPAT fell from $71 million to $52.6 million. A final fully franked dividend of 0.5 cents per share declared, bringing full-year dividend to 3.5 cents. Typically, you see the final dividend greater than the interim dividend. In this case, no. So maybe the management is showing that they're a little bit concerned, they're being a little bit conservative with the dividend, and maybe that's why the share price has dropped today for Myer. Other than that, I have not looked at the results any further. And let's have a look at the chart for Myer. I don't remember this chart being negative or positive. If anything, positive. Yeah, positive. If anything, positive. Yeah. But funny enough, today there's been a bit of buying. So we talked about a bit of selling with SKS Technologies. For Myer, there's been a bit of buying because the share price fell down about 77 cents. Now it's at 84 cents. So share price has rallied 10% from the low. So initially, the market didn't like these results. That's interesting in itself. And more than likely, the share price did reach its low within the first few minutes. Yeah, the share price low, actually, the share price low was at 10:37 a.m. And we have seen share price rally. Some good volume coming in after about 1 p.m. It's a little bit of spike. So we have seen buying instead of selling. So those who wanted to sell have already sold out more than likely. And a nice little rally. So in fact, even though share price is down 4%, this is actually more bullish. So you do have to look at the whole picture. Just don't look at the share price movement and say, oh, it's negative or it's positive. Look at the full picture here. In fact, this has been positive for Myer because it was down by more than 10% at one point. In fact, it would have been down 77 cents. Yesterday it closed at 88 cents. So we are talking about 13% drop in share price or 14%. And it's rallied to be only down 4%. Okay. And otherwise, the chart doesn't look that bad for Myer. On to Mithril. Mithril, originally I put this company at number 3, and it's risen to number 1. Mithril, silver and gold. And all I did was look at the title. Mithril drills 144 grams per ton gold, 1,162 grams of ton silver over 7 meters. Now, if that 7 meters was like 70 meters, this would probably be one of the greatest drilling results in the history of mining. But over 7 meters, that's pretty good. I didn't even open up the rest of the announcement. I just saw that and went, that's pretty good. I don't know a lot about drilling results, but I know that's pretty good. And that's why the share price is up 61%. This is the second good announcement this company has released in a fairly short period of time. And you'll be able to see that. In fact, let's go back. Yes, 16th of September, over 100% increase in district historic mines and workings. Now, there was a positive reaction from that announcement. I didn't quite see it, didn't quite understand, but I do understand this positive reaction. And let's have a look at the chart for Mithril. Company I've never heard of before, but definitely have heard of it now. And the share price has really taken off. In fact, a nice reaction after that good day on the 16th, the share price kept on climbing the next few days. A little bit of sell-off yesterday, and those who sold yesterday are now kicking themselves because of what happened today. Share price up to 32 cents. It wasn't long ago. The share price of this company was below 10 cents. And look at the volume. So the volume of the 16th was pretty high, but it is no way comparable to the volume today. Massive volume coming in for Mithril. A fairly bullish looking chart for this company. And this deserves to be in the number 1 spot, in my opinion. Okay. So that's all I have, the top 5 stocks of the day. I think there's no other charts I wanted to show you. Maybe a few comments. Have you been following EIQ? I think I did mention this the other day, EIQ, because it did look interesting. Someone else mentioned it, if I remember correctly, Echo IQ. So I did talk about Echo IQ the other day. And the one thing that really is noticeable about this company is the volume over the past 2 weeks. Really big volume coming in. Share price has hit a resistance level. It looked like it was trying to break out yesterday, and today share price has pulled back and is now below that resistance level. So it's trying to break out. So Echo IQ is trying to break out as we speak. I just like that volume. That's really good volume. Yes, so I have been following, not closely, Echo IQ, but I wouldn't say it's broken out just yet. I won't confirm it just yet. I don't know that. MME, talked about MME today, and I've talked about this today, I suppose. And 9 Slide Glide says, in case you weren't aware, OCL Objective was recently added to the S&P ASX All Technology Index. Other additions in this index are Catapult and Findy, possibly some buying interest as a result. I'm always dubious when a company is added to an indice and people say, oh, the share price should rally. You don't always see that, but maybe you are right. I just had a burp there. And let's not forget or ignore K23 Man. Been following BCI for several years. It has rallied recently because it finally received the last environmental approvals required to construct its salt production facility in West Australia. It has the potential to be a lot higher in years to come. The risk is around execution with the construction of the facility, which from memory is about 40 to 50% complete. I love information like this because I don't follow this company at all, BCI Minerals. So let's have a look at the chart for this company. Yeah, I don't follow this company at all. So I love information like this. And the share price did rally into resistance zone. And share price has pulled back the last 2 days, which is understandable. But it's pulled back on lower volume. So look at the volume. Share price rallied on good volume, has pulled back on lower volume. Not necessarily a negative thing, but I'd love to see the share price get above 32 cents. Okay. Like you and like you. And that's all I need to talk about because the next comment after that is comments I talked about. There it is. Someone said, check out BCI. So quite a few are on this. Anyway, that's all I got for today's video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.